What's up, everybody? Welcome to the morning after live Q&A session here on Zach's Live Trader. Here with you as always, I am the bearded boy wonder, and today, my friends, got a few things going on. It is the morning after Facebook earnings, the morning after Tesla earnings. So I want to dig through that a little bit. Also, I do have I'm not going to say a fancy presentation, but I got a quick little presentation that I gave to my colleagues at Zach's yesterday, just on a couple of things that I've been seeing in the market. So I figure we would go over them, talk about it a little bit, and, kind of go from there. And again, this is kind of a free-flowing sort of live event. So if you got questions, just throw them in the chat, and I'll get to them as soon as I can. Remember, there's a little bit of a delay here. It's about 30 seconds from the time when I talk to you guys actually seeing it. So if you pop something up in the chat, you feel like I'm ignoring you, I'm not ignoring you. It's just a delay. We're in the matrix, okay? But I do have the chat window open, so I will be typing in things like, hey, everybody. See, I just put that in, boom, and then I set it at the same time so you can see how long the delay is, okay? Just going to wait a couple minutes, not too long, just kind of give people a chance to trickle on in here. And we're going to go ahead and get set. So far, so good for Live Trader this week. I guess the theme has been, as I'm looking over some of these, preferred trades, like shorting out of the money, credit spreads here for the most part. And a lot of them being on the bearish side have been the way to go. And I want to review this real quick. And I know today's Facebook and Tesla, but I get to do what I want because I want to. So remember, bearish divergence here on Amazon. I kind of pointed that out between the Chaikin money flow and what was happening in the actual price. Part of that caused me to say, hey, why don't we sell the 955s? And that looks like that's working out. Because even though they beat, and I had people freaking out like, oh, it's going to go to 1,000. I'm like, guys, reel it in a little bit. And certainly this has been the case where it's not over 955 right now, right? Now it doesn't mean it won't go over 955 by May 19th. However, still nice to see that, it's not getting up above that, right? So this is good. This is good. Was it a 19th or did I do the May? I can't remember which expiration we did at Amazon. I have to go back and check. Actually, I have to go back and check. I have on my spreadsheet here May 19th, but I don't remember. Maybe I did. Huh. So there's that. Apple. Now these guys missed, but when we did our little game plan happened back on Friday, and then there was a huge rally Monday prior to earnings. So these guys were still, 145, 147 call spread for a 77-cent net credit. So that's still playing itself out. And I'm going to go over these, obviously, in the good, the bad, and the ugly review that's coming out later today. So I don't want to harp on these too much. But Tesla, my friends, SpaghettiOs. Wow, see, I was getting ready to come here and concede that, like, oh, yeah, we sold that out of the money call spread, but, we could have made more money. Wasn't the lotto ticket the 305-295 put spread? Because if that's the case, somebody out there is dancing in the streets. I thought it was the 305-295. I guess I'm going to have to double check on that. Anybody, do you guys remember what the lotto ticket? Man, I should have that. What was the lotto yesterday? I thought it was 305-295 put spread. for like 124 or something like that, right? 142, 124. I'll take a look after this, but looks like the lotto's in play here. The lotto is in play. And look at what Tesla's doing. So it opens up at this fib, and now it's testing this fib. Started this 295 area. I love it when the fibs work. I absolutely love it. So to anybody who did buy that lotto ticket, you want to try and, well, you got one more day. I wonder what that's trading at. Let's pull that up. Wow, this is good. Oh, 295, 285. Okay, 285. Okay, all right. 285, 290. So that's still got to be, but right here at 295, 285, I bet you that lotto ticket is still in the money. I bet you it's making money right now. Okay, let's look at this. Let's pull up our options chain here. Oh, by the way, I'm not going to say I got in a fight with that other company. Remember I was using those kind of real-time charting thing, or real-time options chain, and I was always upset with them because the thing would crash all the time. Well, so I just finally decided I've had enough with it, so I'm looking for another way to get my live streaming options quotes. Of course, I could just pull up my E-Trade Pro. I keep forgetting to do that, but it's a little bit of a process because I got like this token and then all this stuff going on. G14 classified. Okay. Where was the lotto? This one. So look, this is what I was saying. Even the 295, 285. So it's in the money at least. This is very surprising to me. And look, there's a little bit of delay on these quotes, so I bet you this looks nicer right now. Because Tesla's not, it gapped down, but it's going to take some time for this to work out. Okay, it's making 55 cents now. Thanks, Jerry. So, yeah, so even that's working out. So that's good. But the good news, though, is that, you know, the trade that we were actually talking about, which is the 332.50, is going to cash. You're going to cash out on that one probably for a nice victory, because that's all the way out here. Look at, there's still, that's amazing to me though. What happens with Tesla is that, you know, it can be $10 out of the money and there's still $4 of juice on it just a day out. It's amazing. Anyway, so I think Tesla's going to work out for us, so that's a plus. Just that huge run up, and again, I'm not, you know, this isn't an indictment on Tesla, the company, or anything like that. It's just heading into this earnings report, it just looked a little bit overcooked, and it was. And now you've got a situation, if you're a Tesla shareholder, where this money flow has just crossed over to negative. The commodity channel index crossed over to negative, right? So you've got a lot of negative developments here. This first support, then you got the next, the 50% retracement, which also happens to coincide with the February highs. I'd say this is definitely where Tesla ends up going over the course of the next few days, right? If it continues to unwind, definitely has to retest that, and could obviously get down to the 61.8, no problem, and still be in an overall bullish trend though, which is the amazing part. And you could do this yourself by feeling out sort of this first fib move here. So let me delete this just to make it more clear. So you look at the first move from the December lows to the February highs, draw your fib levels, and you'll see that it came back to the 38.2% retracement level prior to finding a bid and going higher. And the really interesting part, and I forgot to bring this up to my buddy, I call him FNG. Stands for freaking new guy, because he was the newest one here at Zacks. That's Jeremy Mullen, awesome trader. You can learn a lot from that guy. He's big on the fibs. And I didn't show him this, and I think he'll freak out when he sees it, that this was in fact 38.2% extension of this move. So just remarkable, really, how these algos price these things and move these things. So 285s, I think, next stop here for Tesla for sure. And what you can do is when you're drawing these fib levels, and this previous high here, you get what's known as a confluence of support sometimes. So what that is that's where two of these fibs match up together. So obviously this is the bottom part, but here now this is going to be confluence support at 285s. Just where a couple of them meet up together. A guy who was big on that was another huge famous trader called Joe DiNapoli. He's got this whole thing called the trading DiNapoli levels, I think it is. And that's how I started doing the Fibonacci analysis. One thing that DiNapoli uses in all of his trading is he uses a displaced moving average. So you could do that on freestockcharts.com. Just go to moving average edit, and it says offset. So instead of using a 50-day, he does the 25.5. He also does, I think, the 7.5 and the 3.3 to get different moving averages. But he'll use this as sort of his trend indicator. I was doing that for a while, and then I don't know. It just seemed like you're getting too cute with the offset and all that. I like to keep my life simple, so for the most part, I use a 50-day. Now, what you're supposed to do is you're supposed to kind of fit the moving average to whatever underlying security you're talking about. So I think, can you do moving average envelopes here? No. Okay. So what you would do is you would plot a bunch of these moving averages, or you would just kind of keep changing it until you got sort of, I don't want to say what you were looking for, because that almost sounds like, we're over optimizing, but you want something that is going to make sense, that the underlying stock is going to interact with, that you think could be tradable in the future. So like here, Tesla, has a tendency to run up here, and then when it dips, it has a tendency to run for a little bit. Granted, it's had some choppy behavior, but whatever it is, and then you kind of fit the moving average to the individual equity that you're looking at, right? So that part is kind of optimization, and it feels kind of cheap, but as long as you're not constantly changing that moving forward, it's good to set up a trading plan that way. So you can use it and say, okay, Tesla is all about the 50-day, right? And then moving forward, you're going to use its interaction with the 50-day to influence your trading decisions. So you're going to go, okay, if this bounces off of here, that's where I'm buying. You don't go in the future and then change it again and say, no, I think the 65 is a little bit better, and whatever, right? So this is all different. Anyway, so there's this. Now let's go. So it's Tesla. So Tesla's running. This is good. Facebook. So Facebook here. And what the heck is this line I drew up here? That was for something else. That was the top. So, okay. So I drew in the 160, which was sort of the top end of what the options market was pricing in, right? This is what Danny, I'm confused at what you're asking right now. So if you could please clarify, I'll try and answer your question. I was talking about moving averages with the 3x3 and 25.5. I wasn't talking about the actual options. I'm talking about this chart. Anyway, so we had the top end for Facebook. So that was what the options market was pricing in, sort of that 160 move. So we sold out of the money that way. That's been successful early on, right? So far, so good, in the green on Facebook. Facebook was a pretty good example of this money flow pattern. So Sideways action for Facebook into November and December. And then while the money flows were turning positive. So that's a buy signal here when you're seeing this move up and the stock's going sideways. It's only a matter of time pretty much. So they work out all of the selling and then boom. So then win higher looks good. Oh yeah, Danny, you could do that. Sort of a reactionary trade. Yeah, we're gonna get to that. I'm gonna get over to kind of today. What are some reactionary trades in a little bit? Yeah, we're gonna do that. Okay. First, just let me get this this sort of Facebook thing covered. So 160s, boom, had the money flows showing us what's going on. Off of there, everything looks good. Now it's starting to trickle back down a little bit. If you notice, the money flows have dipped. Now we got an oversold commodity channel index that's coming on down. And Facebook, really long-term bullish trend still very much intact. So this thing could get down to 143 and still be in a bullish trend channel, right? So that's good, especially if you're a long-term holder of Facebook, and you could go just about as long as you want to go on Facebook, and it's just been trucking higher. I saw a tweet about a Barron's article that came out shortly after Facebook's IPO, after the thing sold off. It was like $24, and the article said Facebook still richly valued, should be worth $17. Well, that never happened. And Facebook obviously has gone on a fantastic run since then, and looking good still. Just the market, I think, especially this week, since we started off with like blockbuster earnings out of Apple, blockbuster out of Amazon. Since then, and Alphabet too. Or it was Alphabet and Amazon rather, yeah. So since then, it hasn't been that great as far as the reaction to these earnings reports. So it's like the market's expectations are just way too high. Even if people have a good quarter, they just destroy them. Here's a stock that I had in my home run investor service that got crushed. Messed up their guidance for Q2. This is a little, they say chips are for dips, right? But this chip maker, we bought this at like 20, got all the way to 50s, and then started to chop lower. And finally, when it made this gap down, I said, man, this has to go. But this is likely to recover nicely, I think. So if you guys want some longer term stuff on your radar, take a look at this one, Infi, IPHI. I would wait. They've got like a situation happening with inventories right now, so things probably won't get better till Q4. But something to have on your radar. To just keep an eye on this stock over a long run, Infi, IPHI. Okay, so let's sort of look down intraday here on Tesla. So guys, you remember one thing I love to do is sort of fade these big moves when right after earnings. But here's the problem is you have to find like Starbucks, for example, right? See if we can get this on there. Yeah. See, so the Starbucks report came out and it wasn't that terrible. But for whatever reason, they pummeled the stock. And look, this thing sold off, boom, huge spike down. And then they came to retest the low. And when they retest the low and fail, that's when you buy. That's when you, load the boat on that option like we were talking about. And that 59.50 call, which was like 20 cents on Friday, that's the way to play that. Since then, it's been trickling up higher a little bit, right? So you want to find a situation where the earnings report wasn't that bad, but the stock got beat up, okay? Now, when it comes to Tesla, the earnings report wasn't all that terrible, right? I didn't think it was that terrible, and it looks like we're on pace now for everything to be okay as far as deliveries are concerned with the Model 3. But here's the problem with Tesla today, intraday. We've dipped below 300. Now it's creeping up. I think the stock has to get past 300 resistance. I think people are going to sell that today. And I don't think it's done making lows. So this might be one that either towards the end of the day today is when you buy a call to try and fade this. Or even after whatever the reaction is going to be tomorrow morning. So I don't think that the lows have been put in here for Tesla, right? But this is the part about doing this sort of fade the options, fade the reaction earnings. That's tough. Is now you are a day trader, like an intraday day trader, and what's gonna push this one way or the other is not so much the macro stuff. It's just the actual mechanics of who's coming in to buy and who's coming in to sell and where's the volume and blah, blah, blah. So you can see here by my little volume at price indicator that a ton of volume is going out right here. So perhaps this is bid here at 295 and this does get defended. I just can't imagine that it doesn't go, that it just keeps going up. I'm going to see if I can do just the day number. Can I get the day today? And do I have a VWAP on here? Yeah, I do. What do you guys know about the VWAP? Volume weighted average price. If you're day trading anything, you need to be all over this. Look at what they did here. Tesla comes down, test the VWAP, sold again. Test the VWAP, sold again. And look at that VWAP is starting to put itself right about 300. So wait to see what it does to the VWAP. I think they pound it down a little bit more. So there's that. VWAP's great. Volume weighted average price. It's not on every trading platform out there. If you don't have VWAP on your trading platform, you need to get a new trading platform. I mean, quite simply. Because this dominates the way that things are played throughout the course of the day, especially intraday. This is what the algos are all programmed on, what the programmatic selling is all about. It's all about this VWAP. So they sold the VWAP earlier on today on Tesla, and we'll see what happens. Okay? So there's that. Facebook. So if you notice here, Facebook comes down, test the VWAP, sold off, broke the VWAP, and then got bid at the VWAP. This thing's breaking higher. So Facebook's going to fade this throughout the course of the day. All right? They're going to fade this Facebook move. Don't be surprised if Facebook gets back to break even. So now this is perfect. Maybe the Facebook is what's setting up. So pull up your Facebook, and then now you want to be looking for some Facebook calls that you can roll the dice on here. Or you can sell the out-of-the-money Facebook puts. Right? So this is when, if you're going to be a real intraday kind of person, now you could say, okay, Facebook's coming higher. It's not, so any of this is game, right? You could sell any sort of put spread here. You could sell these, sell the 149, 148s, make a quick 30 cents on this. Quick little reaction in the hopes that this continues to come up. Of course, it's going to come test this VWAP maybe again. See what happens to the VWAP, but I think that Facebook's going to be at break even today. So that's one way to play it in the after reaction, right? Say that, okay, the bad stuff's already done. I could sell the puts out of the money. Or you can risk less money by just rolling the dice on, the 150 call right now. It's going to cost you $80. You buy a few of them in the hopes that Facebook creeps on higher. So this is a way you could pretty much day trade without having, $25,000 in your account and you can control a very small amount, or you can control 100 shares of Facebook in this case with $80, right? So your leverage is there. And the great part about it is your downside risk is defined too. My risk is only $80 per contract. I know that heading in. Very small. So that's something to look. VWAP. SHA VWAP. VWAP? Is a volume weighted average price. Okay. So just a quick question out there: how many of you are familiar with the VWAP? Have traded with the VWAP before? Have used it in anything that you've done in the past? Just want to know if anybody's messed around with the VWAP. Don't be shy. Go ahead, throw it in those comments. Let me hear what you've, And I also want to get, one of these days I'm going to figure out a way to do this and have FNG here with me. Dave, I'm talking like tomorrow. Like ultra short term kind of stuff. Very short term trades. Yes, very, very, very short term trades. Yeah, so the way that, let me zoom out to sort of the big picture here, right? Yeah, it's all about the VWAP, man. You guys got to learn it. So in the grand scheme of life, right? If you notice, I have these horizontal bars, this horizontal histogram for the volume at price, right? And because the way that the market moves is three-dimensional, and we only look at it in 2 dimensions on these charts, and then people wonder why all these price studies don't really work, right? The market moves in 3D. You have price, you have time, and then you have volume. So we're all sitting here trying to figure out where something's going to go in 3 dimensions, and we're only using 2 dimensions to try and figure it out. So that third dimension that you have for sure is volume. So people will talk about putting volume here at the bottom of the chart, and you use it in a way that you can confirm, right? So here's your volume, and you're like, oh, okay, well, that's updated, the volume's there, that moved, there's volume there. It's not the same. Having volume down here and then trying to put it together on the chart just doesn't work. So what you need to do is have a way to more easily blend those together. So having volume down there is volume each day, right? So again, still 2-dimensional, but it's there. And then having this horizontal histogram, I'm having volume at price. So that's another way that I'm kind of getting it. So I'm getting it from these different angles. And then here I have price at time, right? So you've got to find a way to sort of merge all 3 of these together. And the VWAP does that nicely when you're talking about intraday, because what it's doing is it's taking not just the average price, but like the name suggests, the volume weighted average price. So this is pretty much the average price at which it has traded throughout the course of the day, right? So exactly half of the nominal value on any given day is above or below the VWAP. So when big firms, and I'm talking huge Wall Street trading firms, the biggest firms, are trading for their institutional clients, they give them the average price on the day. So what they're trying to do is buy cheaper than the VWAP or at the VWAP in order to make sure that they're going to make money on the average, okay? So that's what happens with the VWAP. So every big institutional trader on earth uses the VWAP. All of the algorithms use the VWAP. And you'll notice it not just here in an individual stock, but you're going to notice it in the currency markets. You're going to notice it in all things futures markets. Everywhere you're going to see it. If you looked at the ES chart right now intraday, you'd be seeing interaction with the VWAP all the time. If you look at crude oil, big time. Crude is huge when it comes to the VWAP. and its interaction there. You will be shocked. And then another thing that they do is standard deviations away from the VWAP, which is pretty cool too. So it's all over the place. Okay, so why am I talking about so much volume-based stuff here? I think this Facebook trade is going to be good, by the way, guys. Intraday, if somebody's going to make that move, you guys let me know, because I want to live vicariously. And I can't mess around with it today because I've got too much. I got too much going on. I noticed if I try to trade while I got other stuff going on, I'm basically lighting money on fire. I don't know if you guys have it the same way, but if I try to get active and I've got other stuff going on, forget about it. I'm just throwing money into the fireplace. Too much going on is not a good thing. Okay, so think about the VWAP on a daily basis. I got my volume at price here, right? The importance of volume. So what the heck is this Chaikin money flow? I still don't know this guy's last name. Money flow that I've been messing around with here. So now I'm going to bust out my PowerPoint presentation. Now I gave this to everybody at Zacks on yesterday, actually, and we were looking at a few things. And I'll go back to this stuff with the CPI and blah 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 blah. But what I want to go to is this money flow. So I called it a new arrow for my quiver, right? The Chaikin money flow. It's a cumulative measure of money flow volume. And money flow volume is, I forgot what I was going to type there. I didn't even finish it. But it shows buying and selling pressure, right? So the way they calculate it is the close minus the low minus the high minus the close divided by the high minus the low times the volume, right? I'm not going to get into the theory behind the math here. Just understand that it's an overall just kind of flow based on where the close was in relation to the range and how much volume gave out. That gives you sort of a gross estimation of, was it a positive day for money flows or was it a negative day? And then the money flow, the Chaikin money flow, shaken, like shake and bake, like shake and bake, shaken. Okay. Well, let's see. You know, it's funny that a guy with a last name Bartosiak is hacking apart other people's last names. Cool. Thank you. All right. So, shaken. Good, because I've sounded really stupid calling him all sorts of other names. So now I'm glad I can sound like an expert. Shaken money flow. Not stirred. So, 21-day average of the daily money flows. That's what the shaken money flow gets you. And so you can use it for trade confirmations. So during a bullish trend, the shaken money flow is going to be above the zero line, and that's going to confirm the bullish trend that you're seeing there. So it's good for trend confirmation, which is huge when you're talking about trading, because the trend is your friend until it ends, and that's what you have to look at, right? Okay. Above zero, rising prices, confirming the trend, fantastic. Now, one thing that I want to point out here that I didn't really I put later in the charts. If you can use it for trend confirmation, then you could do the opposite. You could use it for divergence between the current trend on the price chart and what's happening in volume. And that, I think, is where you get the most opportunity. Look at Newman getting in there. Getting in there, Newman. I love it. These shorter term trades. That's right, Kurt. Shake and bake. The short-term things, I think they're great, especially following earnings reports. You can do all sorts of fantastic stuff right there. That's wonderful. All right. Now crosses. So similar to the, moving average crosses or commodity channel index crosses or insert cross here, you always get this. So in this case, the bullish cross is it going from negative territory, crossing over the zero line into positive territory. Boom, there you go. So there's that. The thing I don't like about these bullish crosses overall in everything, in every single one of these indicators, you get this. You know, it's all good on paper when it's like, oh yeah, you just need to cross over to zero line. And then even on this thing, what about this? What about this nasty chop disgustingness that happens on these charts? What are you supposed to do when that happens? So that's why I don't particularly like the bullish cross of anything, right? Crossing the zero line. Even on the commodity channel index, and I don't know if you guys have noticed this, maybe you haven't, but I would rather use, like, it goes way oversold, so it's negative 100 and then it crosses over, and then I'll use that. Or I'll use it from when it's negative 200 and it crosses over negative 100, and I use that as a positive one, versus this nastiness that could take place and you're just stuck chopping around and get whipsawed and just nothing, right? I know I'm airing out my grievances with technical analysis here, but you guys are the only ones who will listen. Bearish crosses, of course, are the other way. So this is when it was positive, and then it comes down to negative, right? So now here it is. Oh, hey, that's bearish here, so we should sell here. And, of course, it looks great, right, because they handpicked the charts where it's awesome. But, look, you also had this first, and then it comes down a little bit, but then it rallies, right? Like, what the heck? That's why I don't like the cross. But what I do like is the overall sort of bearish activity. And then so you go bearish, okay, that's confirmed. So that's not a trade I would even take. Then you got bullish, that confirmed. I wouldn't even take that. You know, so I don't use this for its confirmations, I suppose, and the crossovers. I like to use it for the divergence. That's the way I do it. Because that has been the best, I think. Bearish divergence in Amazon. This is a little bit concerning to me over the long run. Of course, I draw my angry face. Bearish divergence again on Apple, where this is coming down, and Apple's, still going up. And we're seeing what's happening to Apple come down a little bit. This probably works better on stocks that aren't the most popular in the world, right? And that's what I got to try to find, is the ones before. And then, of course, the bullish move on Facebook, when you had the bullish divergence in November and December, and the stock was moving sideways, only a matter of time until it takes off. So that was good. And then Google, I was saying, hey, are you guys running out of gas? Because you're getting this bearish divergence while stock's still going up. So I don't know. Maybe Google's putting in a top here, or maybe this buying power is going to switch right back around. Casino stocks, I don't know if you guys have been looking at casino stocks at all, but they are on fire right now. In fuego, as they say in Espanol, and just moving higher. So this was Wynn Resorts. Another one, Boyd Gaming. Crazy. Look at the move in Boyd Gaming. I don't know if you guys have looked at any of these casino stocks, but this might be where it's at. Up there, nothing there. Here's that cross they were talking about, right? But you could have played that as, well, this is kind of sideways for the most part, and this has been creeping up, and then you get your buy. But, timing that's tough, but it is what it is. So, yeah, Boyd Gaming is another one. Wynn, of course. Penn National Gaming. I don't know about this one. So you got this fierce move up, and you know what that was? They bought a Bally's Casino. Part of that, the last part of that, I think, was the Bally's Casino. And then now this guy's sort of putting out a little bit here. Buying power is not so sure, but I don't know. Dave likes it. All right. All of this was for some more technical stuff. I don't know you guys care about this at all, but I'm going to go real quick on this. So, 10-year Treasury has actually been coming down since the Fed raised rates. So these are the rates, right? 2.296 is actually 2.6 296. Okay. So just off by, it's an OBOB. So you have that, right? So rates coming down, that didn't make sense to me. 30-year rates coming down also didn't make sense to me. So I was saying, well, maybe there's just no inflationary expectations, and there really isn't, because inflation's been at 2% forever. But that's kind of what the Fed's target is 2%, right? So there's that. A big risk to the market was, hey, the Fed's balance sheet is going to unwind, and eventually this awesome, rise that you saw in the stock market is going to put out. I'm sure you guys have seen this chart before, the Fed's balance sheet versus the S&P 500. I do not subscribe to this zero hedge BS at all, because, although this is from Deutsche Bank, another one of my faves, it's just not, like, it doesn't make sense in the grand scheme of things, okay? Yes, it makes your chart look great when you offset it by 3 months and boom, everything's perfect, yeah, whatever. But has anybody ever showed you this sort of Fed balance sheets chart before? So David, settings on the VWAP, there should be no settings for the VWAP. In most cases, just the default of whatever they have will be it, and it will work for you if they're doing it right. If you have settings on the VWAP, then somebody's messing with you, because the VWAP sort of by definition is supposed to be on that day. So I don't, if you have like a different, I'll look at that. I'll go back to that VWAP thing in a second. So let me get through this. So this chart here, anybody ever showed you before 2009? Yeah, here's before 2009, and here's the Fed's balance sheet. So just steadily increasing, right? And a lot of this is compound interest, sure, right? If you're holding it and just reinvesting what you got, boom. Earnings yield on the S&P 500, and the reason why I'm doing this is because what people like to do is they like to compare the 10-year yield, or the risk-free rate is what they call it, to the earnings yield of the S&P, which is essentially the PE ratio flipped on its head, right? Now, I don't know how they got 3.95%. They're calculating 25.29% PE on the S&P 500. That's way off from what we've got, but whatever. So there's that. Go back here. So earnings yield 4% or whatever. Comparing that to the 10-year, right? And that tells you the relative attractiveness of stocks. What's supposed to happen, though, is the 10-year is supposed to pay more than the earnings yield on the stock market. That's how it's supposed to be. And when the market gets way out of whack at tops, it's supposed to be at extremes. But this was a bottom, right? Here was the top of the market, where earnings yields were. And this was the bottom. This is 09. So anyway, I guess the point here was that we were a long way off from the top. And then technical charts on the S&P, of course. You guys see this in Dave's Daily Dive, so I don't want to go into this too much. But the long story short of it is the market's all about risk on right now. And the yen trade is showing you risk on. And that's what's happening. So we had risk off from the middle of December up until April 17th. And since then, it's been risk on. And it's been crushing everything in its path, okay? Including my friend, we all know and love, gold. They are destroying this thing. They are just taking it to the woodshed. They are beating and pummeling this. Probably because I bought a gold stock at Home Run Investor. I'm pretty sure that's what it was. The market saw that and said, nope, I'm going down. Now, this is actually right around the time I stopped trading gold futures for a little bit. I had to take a little break because I was losing my mind and losing a few bucks too, not going to lie. I was hanging in there real good, and then it just got away from me, and I'm like, all right, I need to reset and come back. But the bullish trend in the short term is still intact for gold, even though it's coming down right now. But what's weighing mightily on this is the yen. Gold can't go up if the dollar yen continues to go up. They move in opposite directions. So I don't know if you guys got any gold trades on, if you look at these gold miners, it can't happen. And the yen is now going to approach 114, probably. But it could get even scarier for the gold bulls, because guess what, my friends? We are breaking the top end of this trend channel, and we all know when that happens, this thing breaks up through the highs. So don't even wait. There's going to be a lot of people that are sitting on the sidelines waiting for gold to break, or the dollar yen to break 118, 119, saying that's when the breakout's going to happen. Man, we're elbow deep in the breakout right now. So if this continues, I mean, literally, like today is the critical day, because yesterday it broke on through. Now, do we get follow through today? If the answer is yes, then look out, because that's going to break higher. But this is the thing. If, and today's the biggest if. So will it do it? Ask me tomorrow, and I'll tell you. But right now, this is on the precipice. So if you're thinking about going long gold, or going short gold, or going to the gold store to turn in your gold that you have at the pawn shop, just take it easy for one day. By the weekend, we'll have a clear picture of where this goes. If this reverses to the downside, load the boat. Buy everything that glitters if it reverses to the downside. If it breaks up, then do the exact opposite. Right at the precipice there. Why am I saying that? Because that's going to present an awesome trade opportunity, which hopefully I can take advantage of in Live Trader. We might be able to find something that's reporting that's going to be right here, and we're going to have some nice little insight because of this. It's going to give us an edge on the rest of the market, okay? So, wonderful stuff. So, where was I? No settings on the VWAP. Yes, it sounds like shake and bake. It's shaking. Win, I like Penn. PCLN. When did these guys report? When did these... Oh, nice of you to join us, Jeff. Would you just get up 47 minutes in? What were we talking about? PCLN. Let's look at PCLN. PCLN. Okay. Let's see what our Zach's rankiness is on this thing. 3, so we're neutral. The 9th. A report on the 9th. When is the 9th? Where am I? Where is today? 9th is Tuesday. After the market closes Tuesday. The 8th. Monday the 8th. Monday the 8th. Maybe I could talk about these guys on Monday. What do you think? Who wants me to do a Priceline show on Monday? Go ahead, throw it out there. Should I do Priceline Monday? I'll ask you guys. See what you guys have to say about this. Kurt, and everybody actually, you guys should know this. So, I run Home Run Investor and I run Momentum Trader for Zacks, right? So I give out a lot of trades recommendations there too, right? I do a newsletter there where I tell people to buy stuff, to sell stuff, blah, 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 blah. Zacks and the regulatory bodies, right, don't allow me to trade in anything that I'm telling people to do, right? Because you can think about it like it would kind of be underhanded for me to and illegal for me to front run everybody's trade. So I can't be like, hey guys, I go buy XYZ and then I tell everybody to buy XYZ and then everybody buys XYZ and then I sell it. That doesn't work, right? I can't do that. So the same goes for Live Trader. So I can't put together a trade it, and then tell you guys about it and then go do it. So the good news about Live Trader is I'm not trading against you guys, so you don't have that, right? So I can't, they do not let me do it, the trades that I'm telling you guys. I could do things very similar to them, but you guys end up getting the best picks of like exactly what should happen, and then I have to kind of pick from either different strikes, different dates, different strategies, or different stocks altogether. So that's they can move an option, Kurt. They can move an option. And let me tell you, there's a lot more. There's a lot more than 30. A lot more than 30. Yeah, so Righty talked about it. So yes, Kurt. 30. Yeah, it's way more than 30. On some of our Amazon, I have videos here where we've had 1,500 views on it. That's just on this Live Trader stuff. And then on ZU, I mean, geez, man, we've got, I think in Home Run Investor, I think it's 5 figures of people who get it. I mean, it's a lot. So anyway, okay, where are we at? What are we doing? So Priceline, guys, I could do price. I don't like doing Monday videos, but I'll take one for the team. I could do a Monday video. We'll do Priceline on Monday, just so everybody knows. We'll do Priceline Monday. So we'll do it Monday. I don't think it works that way. What else, guys? What else? Hey, Newman, which platform? Oh, well, it kind of should. It should. It can look that way. The middle is the VWAP, and the Boley band things are standard deviations away from it. So I have a VWAP on NinjaTrader that looks like that I had to pay for. It's kind of frustrating, but okay. All right, guys. That's all I got for you, so I'm not going to hold you hostage. Thanks for coming out and checking this out, our little morning after thing. Later on today, I'm going to go ahead and do the good, the bad, and the ugly review, where I break it down for you guys of what we've been happening. AMD, sure. I'll answer one question about AMD. Buy the bounce on AMD? No way. That's my answer to that. Be careful with AMD, because this was a stock, remember, that was in the doldrums for the longest. $2.74 a year ago, okay? Nobody wanted this thing. All of a sudden, it's like, oh, no, guys, we're actually pretty good. We got this stuff. We got these new chips coming out. Like, it's going to be cool. We're finally going to be a player. AMD is not now, nor ever has been, nor ever will be a player. It's not going to happen. It's not going to happen. It's just like a secondary company. They're always going to be a secondary company. That's just their thing. Think about how long they've been playing second fiddle. Before they were second fiddle to NVIDIA, exactly. Before they were second fiddle to NVIDIA, they were second fiddle to Intel. And after NVIDIA, they're going to be second fiddle to something else. It doesn't matter. AMD is not that company. I love AMD. They do what they do, and it's great. But let's not confuse AMD with anything else. Let's not confuse the Toyotas with the Ferraris, okay? Let's not do it. It's a Toyota. No offense to anybody who drives a Toyota, but it ain't a Ferrari. NVIDIA, we're doing NVIDIA, so I'm not gonna talk too much about them. But I will tell you that we did get burned on NVIDIA. I made a ton of money on NVIDIA back in the day, and it was all very public too. It was cool. I went on Bloomberg and talked about it, so I looked like a champion. And since then, this nasty downward channel, we're going to have to see if this is going to happen. Yes, they get me fired up, Kurt. That's because I got all my coffee in me now. I'm about to run. I'm going to run outside and sprint down the beach and just start yelling at people when they come by. No, not really. I'm just going to have fun. So anyway, guys, yes, we're going to do a video next week. We'll talk about it later. All right, guys? So thanks so much for kicking it here with me today on Zach's Live Trader. And I will see you all tomorrow for sure. But I'll send those emails out so later today you get the good, the bad, and the ugly reviews. So thanks so much for hanging out with me here today on Live Trader with a morning after Q&A. And I'll see you guys soon. Have a good one.